Hi, good evening, everyone. Welcome to Endowers Live. Today, we are talking about SRS top-ups for tax relief, cash trap, or retirement windfall. So today, we have Lin Sing, my colleague who is from the client experience team, to share with us on SRS. Lin Sing, why don't you just say hi to the audience?
Hi. My name is Lin Sing, Client Experience Lead at Endowers. Super excited to be with us today to explore the topic of SRS, cash trap, or retirement windfall. So glad to see everyone.
Yeah, so let's just get the administrative side of things cleared first. So I think for today's session, please treat it as more like educational content rather than financial advice, right? Because end of the day, we don't know you personally, we don't know how much tax you're paying, we don't know your financial circumstances. So do please just take it as educational material. Okay, and next week we have a different session. So this will be on the CPF calculator that the Endowers team has built. I will be hosting the session again. So it's going to be something that is very interesting because this is something that I personally custom made, on the spreadsheet, working with a developer to have it as a web-based CPF calculator tool so that, my friends and myself can better visualize and quantify the kind of retirement income and wealth that I can get from CPF, better management of CPF. So do join us next week. My colleague has placed up the Eventbrite link, so do check it out. Okay, so we have a very attractive promotion for new clients of Endowers. So if you were to invest a specific amount of money for SRS, you can get up to $100 worth in terms of cash as well as excess fee credits. So do check out the QR code. My colleague again has also placed the link on YouTube as well as Facebook. Check it out. It's a very attractive promotion on top of your tax relief, on top of the very low fees that Endowers have. So hopefully you understand more about SRS and see that it's a good solution for your retirement planning. Okay, we are doing the session on Slido. So just go to Slido, the URL above, key in the code 413391. You would be able to ask any questions and join us for the poll today. Okay, so the first question and the first poll that we have for the audience, so please participate. We are like to hear what your thoughts around SRS top-ups. So have you top up your SRS before? Lin Sing, what have you top up your SRS before, and what are some of your considerations when it comes to topping up SRS?
I actually have. I have topped up, I believe, just twice. Considerations two, obviously reducing taxable income, which we will be talking about. And then secondly is also to plan for retirement, right? So essentially what SRS is for, to reduce taxable income and as a tax deferment scheme, as well as to plan for retirement. So yes, I have topped up my SRS before.
Okay, just maybe a little bit of background about Lin Sing. So Lin Sing is married, but he does not have kids. And so, some of these considerations do come into play, right? Because, we have a personal income tax relief cap of 80,000, right? So for parents who have many kids, for working mothers with many kids, it's possible that, you hit the personal income tax relief cap of $80,000. So you may not want to top up your SRS, right? So for myself, I have topped up my SRS before. I think I've topped up, including this year, will be 3 times. So why I top up my SRS? I think, like Lin Sing, I also want to enjoy the tax relief. 7% or 11%, 11.5% tax relief on that $15,300 can be a very sizable amount. And I think it's not just that, right? If you were to invest it well and it compounds over a long period of time, you'll be able to save up a substantial sum of money, right? And the good thing about SRS money is that you don't really see it and don't have to actively manage it. So I also feel that I'm a lot more disciplined when it comes to investing my SRS monies and managing my SRS monies compared to my cash investments. So maybe just to quickly digress a bit while more of the audience share their answers. Lin Sing, so have you done any of the other discretionary tax relief like CPF top-ups?
I have actually. So I have done a CPF top up to my SA account last year as well as this year as well. I mean, again, for the very simple reason of planning for retirement, as well as earning the risk-free 4% with the SA account, and also for tax deferment. Tax deferment purposes. Very similar reasons. Yeah.
Okay, cool. So I'll share my views about CPF top-ups later on. So let's just get started on the presentation. Seems like we have a huge crowd today who has not, who have not topped up their SRS before. So maybe we'll just start off with running through some of the basics with SRS as a scheme. Right, so SRS is a voluntary savings scheme for retirement. So like what Lindsay and I shared, we make that discretionary decision to top up our SRS, right? So it's not something that is mandated by the government. It's not something that it's automated, right? So this is totally voluntary. You basically have to sign up an SRS account with any of the 3 local banks, and it's something that you can do digitally, and you just need to transfer the money from one of your savings account into your SRS account, right? So it's available to all residents, be it like for as long as you're a tax resident in Singapore, you are eligible for SRS, right? So Singaporeans, PRs, foreigners are all eligible, right? So there is also an annual contribution cap of $15,300 for PRs as well as Singaporeans, and a cap of $35,700 for foreigners. Right. So what happens for SRS contribution is that it reduces your income tax on a dollar for dollar basis. Right. And I'm just going to share a work example on it. Right. So for example, right, if your full year employment income is $160, right, so that will be inclusive of your employee CPF contribution, your bonuses, as well as any other income, right? So if that's your employment income, right, less of donations, that will be your accessible income of $159,000 or thereabouts, right? And then what IRS will do is that they will calculate the different type of deductions and personal reliefs that you're eligible for. So all of these are automated. You don't have to, most of the time, you don't have to apply for it, right? So things like earned income, NSMAN, CPF contribution, right? So all of these are automatically calculated, and then they'll derive your chargeable income for you, right? So along the process, if you were to for the year before, if you were to be contribute to your SRS account, right? The agent bank, which is the local banks that I mentioned about, will make a filing to IRAS, and then they will automatically deduct your chargeable income, right? So that you pay less taxes the following year. Right, so the taxable income, without SRS and with SRS could be something very significant, right? So in the case on the left, if the person were to not contribute SRS, right, the taxable income could be $11,181. That means that he pays around $1,000 in income tax every month, right? But if you were to contribute to SRS, right, you pay maybe around $9,000 of income tax, right? So maybe it's just some breakdown on how this income tax is like, and how much percentage savings that you actually made. So if you were to look at using the same example of $160,000 income, right? So what happens is that the first $120,000, because of the way our tax system works, you pay less tax at lower income level, right? For $120,000 worth of chargeable income, so that will be just the 11.5% tax bracket and below, right? So you will be paying a gross tax payable will be $7,950, right? So that will be a mishmash of 11.5% tax bracket, 7% tax bracket, etc., right? But so the highest tax breaks that you're getting will be at the 15% tax bracket, right? So at 15% tax bracket, you are effectively saving 15% tax bracket on that $15,300 that you have contributed, and that will be a $2,295 savings for your retirement, right? So that $2,295 would be kept within the SRS account, And I'm just going to share a bit more about how SRS is different from CPF top-ups that Lin Sing has shared about just now when it comes to the tax treatment for it. Right, so SRS is not a tax relief scheme. It's actually a tax deferment scheme, right? So the deferment would be until the age of the retirement age where you first put your SRS monies, right? So that will be 62 years old if you were to top up your first dollar into SRS by July 2022, if I recall correctly, right? So what's happening now? I'm not sure if you're following the news. There's a lot of talk about, from Minister Tan about increasing of retirement age, making people more retire later, helping them stay employed at retirement, right? So the government is trying to push Singaporeans to work till a longer age, right? And depending on how you see it, that could be a good thing or a bad thing, right? So all of us want the option to retire earlier, even though we may choose to work a bit later, right? So what you can do now is really to top up that $1 into your SRS account so that you lock in the tax deferment, the free withdrawal age at 62 years old. Right, so if you were to withdraw any time before that, you have to pay a penalty of 5%, and on top of that, you have to pay that amount that you withdraw will be considered as a part of your income tax for the year, right? So it's not encouraged for you to withdraw your SRS at all, right? So when you do your financial planning, when you think about setting aside cash for your slightly longer term financial goals, as well as your the ultimate long term financial goal, which is a retirement, right? You should take into account these withdrawal considerations when you plan your finances. Okay, so you can start withdrawing at 62, right? And only 50% of the withdrawal amount will be taxable, right? So what happens is that if you were to save up a fairly big amount of money and you want to go and spread out your withdrawal, you can potentially just withdraw, let's say, $40,000 a year, or rather $40,000 a year. So what happens is that because of the 50% tax exemption, only $20,000 of it will be taxed. And because of how we have a progressive tax system, the first 20,000 is actually not taxed. So that is how you can look at contributing and growing your SRS account, right? Spreading out a sum of SRS monies to be withdrawn across 10 years, and then trying to avoid taxes, right? So that's how you can look at it. I do have there are some common questions that as financial advisors we get from our clients on the SRS account, right? So there are one of the more common question is am I too young to start my SRS account? Can my SRS account grow too big so that I have to be taxed for it? And are annuity products necessary better than the usual unit trust or equities investments because I can spread out my withdrawals, right? So let me just maybe take a step at the questions. Lin Sing, feel free to add if you have any points to add, right? So am I too young to start my SRS account? So I think the first thing is, how much you want to put into your SRS account, right? So I think everyone should just get started putting $1 into your SRS account. I think one of my interns are actually very, very advanced. She has already done that or are planning to do that, right? So you should start your SRS account now. But with regards to how much, when is the right time for you to seriously put in money into your SRS account? It really depends on your income tax level, right? So for example, if you were to, earn, let's say, around $30,000 or $40,000 a year, then saving that 2% or 3.5% income tax for that contribution may not make sense because you are locking in your money for the long term, right? And you may need the cash for other purposes. So do try to think about like the opportunity cost of keeping your money locked up in a long-term savings or rather a retirement account, right? That should be part of your consideration. Right, and I think one of the other consideration is that people will think about naturally as the next step is, what is the right tax bracket that I put my SRS monies into, right? So I've done a calculation actually. So if you were to scan the QR code, go into this. It's also in the YouTube description below, right? There is an article that I've written on SRS, trying to solve for the optimal SRS monies that optimal SRS tax bracket that you should be looking at when it comes to topping up, right? And I think for most cases, 7% tax bracket and above, it's actually very worth your time to and worth that opportunity cost for you to lock up your wealth for a longer term, right? Even though you are potentially paying tax in the future. So yeah, so related to that question is, can my SRS account grow too big? So back to the previous slide, there is a lot of concern around paying tax in the future, right? So I think the other way to look at it is, if based on the tax savings that you can make now, perhaps it will be able to help compound and grow so that it is possible for you to save $1 of tax now, but pay $2 of tax in the future and still be more well off, right? So there's some considerations behind, but generally it's better for you to have a bigger SRS account than a smaller SRS account than what most people assume. And the last question, are annuity products better than the standard unit trust investments because you can spread out your withdrawals? I think generally speaking, annuity products give a lower return, and especially at the current interest rate environment, right? It's better for you to be invested for the long term using higher returns product. But again, you should always invest based on your risk appetite. So these are a few ways we would just share some ideas with our clients. Okay. With that, I'm just going to pull out this slide. Do check out more in detail on how you can look at SRS top-ups as well as SRS investment options. So SRS is actually a bit more restricted in terms of how you can use it for investments. So I think Lin Sing will be covering more on that later on. Right. So yeah, paying tax equals to making money. I think it's really the point about like $1 saved is $1 earned, right? So currently thank you Face for that comment, but currently if you are following the news, we are going to face the GST increase next year from 7% to 9%, right? So I think Minister Lawrence Wong has already confirmed that. So why not take the chance to consider some of the ways that you can avoid paying tax using legal means? Yeah, so that's it for my part. Maybe just to get a feel on the ground, what tax relief are you choosing this year? So, if you're watching the show, please share your views and let us know, and also find out from the rest what kind of tax relief are they choosing. Do they prefer and prioritize? Lin Sing, what about yourself this year? What are you going to do?
I am going to do SRS. I'm going to do CPF as well as contribute to a couple of charities that I am supportive of. So a mixture of that. I'm also considering for my wife as well. But I mean, of course, I'll talk a bit about how that's a bit different, for CPF from a CPF perspective, contribute to my wife's CPF as well. So that's something that I'm thinking of. So basically, yeah, all options, I think.
All options. Okay.
All options.
So all options. I probably should have left that put that as one of the options, right? So for me this year, I think I will focus on probably just SRS as well as donations. I'm not a very big fan of CPF top-ups because I think I have a pretty much bigger risk appetite than most Singaporeans, and I want to have that spare cash at hand that can potentially do more than 4%. Yeah, so that's my thinking. I think it may not apply to everyone. I think most of my friends actually do both, or they would even prefer CPF top up over SRS because of trying to maximize risk-free returns from the government. But again, it's a very personal question, but very personal consideration. It really depends on each individual. Yeah, seems like we have an overwhelming group that consider SRS. So that's great.
That's great. Yeah, that's super good. And considering we are entering into SRS season, I mean, so to speak, because it's almost the year end already. I'm glad many of you guys are already thinking about contributing to your SRS to ensure that you get enjoy tax deferment scheme for tax benefits and all that stuff.
Yeah, there's this question that's asked by Wing Sun. Yeah, thank you, Wing Sun, for your question. So let me just ask this question to Lin Sing. Would it make sense to actually top up into SRS instead of buying savings plans, i.e. if savings plan by insurance around 300 plus, I'm getting like income of $300 plus per month. At any point, if I wish to quit both schemes, would SRS be better for me?
I think this is a great question. I think first and foremost, you have to ask, I think there are two separate questions in here. One, I think, is the suitability of the savings plan for you. Is it suitable for you? That's the first question. I think that's a question you have to answer yourself, right? I think some of the considerations are cost, risk, suitability, when it's going to pay out, and so on and so forth, right? So first thing to consider, suitability of the savings plan for yourself. Now the second question is whether you should actually top up your SRS. I think Shing-Shi gave a pretty good illustration that for some of us, it will be actually quite beneficial to contribute to our SRS from a tax deferment perspective. So you would have to decide for yourself. We have resources, right? That's available on our website whereby you are able to sort of gauge whether contributing to SRS is suitable. Now, if you answer that question, yes, contributing to SRS is suitable for your tax bracket, then you have to consider the savings plan, or perhaps looking to invest in some other financial products. Then you would have to examine the products. Just evaluate it as it is lah. So I think you need to consider both before you can decide whether which one is better for you lah. Hopefully that sort of answers your question, Sing Sun.
Yeah, so there's two parts to it, right? One, do you want to top up your SRS account? Then two, based on the money that you allocate for retirement, whether you top up for SRS, is buying a savings plan better for you. So maybe just to add on, I think, for many investors, I think investor experience is very important. Understanding volatility of the products, how the payout is going to be like is very important as well. So that part of that question, you probably have to, it's better for you to take it back and consider. Yeah. Okay, let's carry on. Sorry.
I just reread Wing Sun's question, and actually I didn't answer it correctly, because he's actually asking whether it actually makes sense to top up instead of buying savings plan. I think the answer is pretty much the same. I think it's two separate questions that you would have to consider. Yeah, sorry, Wing Sun, if we didn't answer it directly, but yeah, again, I think the answer is the same. You need to consider two aspects to it lah. Suitability of SRS contribution and the suitability of the savings plan for you. Because with the SRS, just to dive into it, with the SRS, you are able to invest in a variety of investments that I will share a bit later. And then we can come back to it if you desire us for illustration lah. Yeah, sorry, Shing-Shi, go ahead.
Yeah, I just want to very quickly point out one point, right? So what happens is that, for many people, even my parents included, they top up their SRS, and to them it's like, okay, I top up SRS and I just leave it there, or do I, should I just invest my money, right? So if you top up your SRS, it's actually very important for you to do something with it, be it buying a savings plan or maybe investing in unit trust, right? Because what happens is that you're only earning 0.05% on your SRS deposits, right? So it's important for you to make sure that your retirement money keeps up with inflation. Yep, so that's what I want to share. Shall we just carry on with the presentation?
Yeah, sure. Well, okay. Thank you all for sharing. Yeah, let's go ahead. Yeah. Well, thank you all for sharing the tax relief you have chosen for this year. So very interesting results, right? I think it seems that many people are using might be using a variety of tools to lower their taxable income, right? You can use SRS, you can top up your CPF, and so on and so forth. But for some of us who are actually quite new to this idea of tax deferment or tax relief, I'm just going to give us a very basic crash course on income tax relief as well as deferment within Singapore. All right. So, as the old saying goes, right, death and taxes are the only two certainties in life, right? So, but what you might not know, right, is beyond the morbid certainty of taxes, right? There is also the exciting possibility, as Sheng-Shi have already shared, there's the exciting possibility of income tax relief or tax deferment, right? So basically lowering your taxable income in the following year. Basically, what this means is that if your annual income is within a certain tax bracket through a mixture of discretionary and non-discretionary means, as found in this slide, you are able to lower your taxes, right? So I wouldn't belabor the point. I think Shing-Shi already highlighted it to you. So I'll just quickly run through examples of non-discretionary earned income relief, CPF contribution, handicapped child relief, parent relief, spouse relief, NS relief, life insurance relief. Very often, these non-discretionary factors will be auto-filled in our income tax return, right? Especially for those of us whose employers submit the employer income to IRAS on our behalf, right? So this scheme is just for those who are interested, for those who are business owners and you want to do it for your employees. It's called the auto inclusion scheme, right? Just FYI, if you want to do it for your firm, or if you're HR, you want to do it for your firm, it's called the auto inclusion scheme, right? So typically non-discretionary factors will be found and pre-filled for you in your income tax return. Now, we will focus on a bit on the discretionary, right? So the discretionary portion, there are 4 unique ways by which you can lower your taxable income or defer your taxes. Firstly, as mentioned, through donations, right, to charities and specifically to institutes of public character or IPC status in short. You can get up to 250% worth of tax relief if you donate, subject to the usual T&Cs. For example, you donate $100, you can get a relief of up to $250. So in future, if you are finding a charity you want to give to, check and whether you see whether you can enjoy the tax relief as you give to the charity. The other methods are CPF self top-ups, CPF top-ups for loved ones, as well as SRS contribution. I'm going to spend a bit some time just to elaborate all 3 to just give us a more robust understanding of how we can actually get tax relief. So let's get to the next slide. I think the very simple one is CPF cash top-up for ourselves, right? 2 ways to do it. One is through the MediSave account, and one is through the CPF special account. Let's look at the MediSave account, right? So the scheme to top up is called the Voluntary Contribution to MediSave, right? So it's a mouthful, so people just call it VCMA in short, right? Do note that there's a yearly top-up limit, right? So this yearly top-up limit is basically the balance of $37,740 less your CPF annual contribution, right? Let me just quickly elaborate. This unique amount of $37,740 is known as the CPF annual limit. Now, if you want to find out how they compute this, you just have to go to the CPF website. Right? I don't think we need to spend some time on that, on how they compute it. But this is called the CPF annual limit, which is basically the mandatory amount of, the maximum amount of mandatory and voluntary contributions to all 3 CPF accounts, OA, SA, and the MediSave account, that a CPF member can contribute and receive within a calendar year, right? So therefore, the top-up limit for your VCMA is basically the balance of $37,740 less your CPF annual contribution. So what this means is if you have already contributed $30,000 through your employment to CPF, right, you will only be able to make an additional contribution of $7,740, right? So $37,740 minus $30,000, you get $7,740. That is your yearly top-up limit, right? Now, for the CPF MediSave, in addition to this top-up limit, there is also a CPF account limit, right? Which is basically the BHS or the basic healthcare sum. Now, I know we got tons of acronyms in the CPF system. Hopefully, by me elaborating a bit of it today, it will also help you understand the CPF system a bit better in line with the SRS system, right? So the BHS or the basic healthcare sum sits at $63,000. Essentially, if you hit $63,000 in your MediSave, you cannot contribute any more to it. And if you can't contribute any more to it, you won't be able to top it up nor get the tax relief, right? Very, very, very simple. The next is if you look at the voluntary contribution to CPF SA, right? I think this is probably something more well-known to most of us. So very simple. You can do a cash top-up of up to $7,000 annually, and this $7,000 would enable you to enjoy a tax relief, right? So basically $7,000 is deducted from your taxable income. A little trick that I'll share with you for free is that if possible, top up your CPF SA in the beginning of the year so that you get to enjoy the full year's worth of interest in the CPF SA account. I think a caveat is to be known here is that we are not advocating for you to top it up. I think there are specific, unique financial circumstances where you will want to top up and not, but we are sharing that this option is available. As Sheng Shi mentioned, he doesn't believe, he doesn't top it up for very unique circumstances to him. That's unique to him. I top it up for unique circumstances to me. So reevaluate your own financial situation before deciding what is available, what is suitable for you, or better still, reach out to the Endower's financial advisors, the client experience team, and we will able to walk you through some of these considerations. Okay, right? So for the CPF SA account, the RSTU or the retirement sum top up scheme, there is also a CPF account limit. Right, so basically it's the current full retirement sum of $186,000. So very simply, right, any top up amount beyond this, you will not it will not entitle you to tax relief. Right, so that's quite simple. So both the BHS as well as the FRS, basic health sum and full retirement sum, this limit changes from year to year. Right, just go to CPF site and they will update you accordingly. So if you could go to the next slide, we beyond ourselves, right, we can do top up for our loved ones as well, right, for our parents, grandparents, as well as our spouses, right. So very, very quickly, for if you want to top up for your parents and grandparents and your in-laws, there is no criteria, but for your spouse and your siblings, there are some pre-qualifying criteria that you will have to fulfill. For this category of cash CPF, for cash top up to your loved one's CPF account, there is a limit of up to $7,000, right? So in a quick summary, the past two slides just tells us that in totality, if you want to contribute to your own CPF and to your loved one's CPF, you are able to potentially enjoy up to $14,000 in tax relief, pending the various qualifying factors and limits. All right. So moving on to the next slide. Next slide, Sheng Shi. Yeah. So we're going to come a bit, to spend some time on the CPF contribution, right? And then I think what I'm going to share will probably answer some of the questions on Slido, right? So Sheng Shi has elaborated on the tax benefits of contributing to your SRS account. So what I'm going to do is I'm going to take us through some very broad statistics of SRS contributions in Singapore. Right, so as mentioned, SRS is a voluntary scheme administered by the IRAS, Inland Revenue of Singapore, and its popularity as a tax deferment scheme has really taken off in the past couple of years. To give you some numbers, right, in 2011 there were about 72,000 SRS account holders with about $3 billion in SRS contributions. Right now, at the end of 2020, there were about 222,000 SRS account holders with about 12 billion Singapore dollars in these accounts. So in just 10 years, we have seen a 300% or 300% jump in the number of accounts, as well as a 400% increase in contributions. So that's pretty large in the space of 10 years. If only our investments quadrupled in 10 years, I think we'll be doing very well for ourselves, right? But what is interesting is if we dive into the profile of these account holders, especially the nationality, right? We find that actually 81% of the SRS account holders are Singaporeans, right? With 12% PRs and 6% foreigners, right? So it sort of dispels any myth that SRS is primarily for foreigners, right? It's actually used across the board and primarily by Singaporeans and PRs. Now, if you're wondering whether you're too young or too old to contribute to your SRS, and that's a question that Sheng Shi was asking, let me share with you the age profile of current SRS account holders. About 20% of SRS account holders are within the age range of 18 to 35, right? 20% of existing SRS account holders are between the age range of 18 to 35 years old. And what is interesting about this age group is that over the past 10 years, this is the age group whose percentage of account has grown through the years. It's the only age group that has grown through the years. An insight to it is perhaps more and more young adults are beginning to realize the benefits of contributing to SRS, right? So that's quite an interesting fact. So it sort of dispels the myth that you need to be of a certain age before you can begin to open an SRS account and use it for tax as well as investment purposes. Then the rest of the figures are about 28, 29% for ages 36 to 45 and 46 to 55, and about 12, 13% in ages 56 to 31, and those above age 62. So even though for those age 62 and above, some of them are, a sizable number of them are also still contributing to their SRS. So what does this all these figures tell us is that both the young and the old are using SRS for a variety of reasons, right? So the onus is on you to explore, to find out after today's talk whether the SRS is suitable for you from a tax deferment perspective, and if so, you should seriously consider investing your SRS, right? So the next slide, I'm just going to quickly rehash some very basic facts about SRS in case you joined us late and missed some of the things that Sheng-Shi mentioned. SRS account can only be opened with one of the three local banks, DBS, OCBC, and UOB. And if I'm not wrong, most, if not all of the banks, you are able to open it pretty much instantaneously through their online banking portal, right? So do find out from one of the three local banks. So after you open your SRS account, right, all your contributions must be made by the 31st of December or whatever date that the bank operator decides is the final date to contribute to SRS for you to be eligible for SRS tax relief, right? So for example, if you had contributed by the 31st of December last year in 2020, you would be able to enjoy a tax relief in this year's income tax assessment, right? So that's quite simple. For some individuals, your employer can contribute SRS on your behalf. This will be part of your remuneration, and it will be taxable as well. And then if you are to open, a last tip is you are to open an SRS account for the Singaporeans among us tonight, you can lock in your current retirement withdrawal age of age 62, if I'm not wrong, by just contributing a nominal sum of, say, just $1, right? So open it, put $1 in to lock in your withdrawal age of age 62. Now, for the foreign friends among us tonight, if you contribute, I believe if you contribute a similar nominal sum upon opening your SRS account, you can basically start your 10-year contribution count, right? So it works a bit differently for foreigners. Let me elaborate. For foreigners, you must maintain an SRS account for at least 10 years from the date of your first contribution. So your $1 locks it in, right? And you must have been a non-Singaporean for a continuous period of 10 years before the date of your first withdrawal for you to enjoy the withdrawal benefits of SRS, right? So what does an SRS withdrawal actually look like, right? In the next slide, let's explore the mechanics. So for Singaporeans, right, if you begin to withdraw after the retirement age of age 62 for now, 50% of your withdrawals will be tax exempt in the year of assessment, right? Let me just give you an example. If you withdraw 40,000 at the retirement age, 20,000, which is 50,000 or 40,000, will be tax-free. The remaining 20,000 will be tax-free because of prevailing income tax rates. Currently, if you earn 20,000 or less, you don't have to pay income tax, right? So based on today's income tax rates, the entire withdrawal amount of 40,000 is essentially tax-free. One thing to note is that after your first withdrawal is done, no further contributions are allowed, right? Now, SRS has provided some provisions for penalty-free withdrawal in certain life circumstances such as terminal illness as well as death, right? And the difference between SRS and CPF is that unlike CPF, you are actually able to withdraw the retirement age. Again, Sheng-Shi mentioned this, but I just want to reiterate that you can withdraw prior to retirement age, but no free lunch in this world. You will be subjected to a penalty of 5% and 100% of the withdrawal amount will be taxable. So hopefully these are some very basic nuggets of information that will be helpful for you to decide whether you want to open an SRS account or not. All right. So moving on to the next slide. If you next slide, Xingxi. So I think am I still on? Sorry, I think we're. I'm not sure whether I'm still on. I think we're having some technical difficulties right now.
Yeah, sorry, Lin Sing. I think there's some internet connection on my end, issues on my end. Just give me a moment, yeah?
No problem, no problem. Hopefully, I know where we left off.
Yeah, I think we just carry on.
Sure. Yeah. Well, as I said, I think hopefully these are some helpful information that will be useful for you as an individual to decide whether to open an SRS account. All right. So now, if you have decided to open an SRS account, can we use the next slide, Xingxi, and use it for tax deferment purposes? We would encourage you to seriously consider investing your SRS monies, right? Now, why you might be asking, right? So let me just quickly elaborate. According to MOF, Ministry of Finances, about 25%, or specifically 26% of SRS contributions still remain in cash. Right now, this is very interesting data because while SRS is great as a tax deferment scheme, SRS is pretty poor, in my opinion, at least, in paying interest because it gives you about 0.05% per annum interest, basically next to nothing. So think about this. If you contribute your SRS for an extended period of time, essentially what you're doing is you're contributing cash into an account, but not investing in it. Your overall inflation adjusted return on your SRS actually becomes negative. And if you just take a very basic inflation rate of maybe just 1% per annum over a period of 10, 20, 30 years, the purchasing power of your money will be eroded with time. So at Endowers, we believe that SRS funds by nature have a long-term investment horizon, right? Where if you are able to take some level of risk, obviously at a risk level that is suitable for you as an investor, you can potentially have higher expected returns for the long term, right? And I use the word potentially because there's of course volatility in any portfolios. And again, the caveat is only invest in things that you are comfortable with, right? So let me just quickly share in the next slide some examples of what you can invest in. You are able to invest in SGX shares. You are able to invest in REITs, ETFs listed on SGX. You're able to invest in listed SGX retail bonds, unit trusts or mutual funds like Endowers' globally diversified portfolios, which are constructed on the best-in-class funds. You are able to invest in that. You are able to invest in insurance products, some single premium annuity plans, and you are also able to invest in deposits, though I wouldn't, I don't know why you would like to do that because at current interest rate environments, the deposit rates are paying next to nothing, right? So this is just a quick summary of what you can invest in, right? So regardless of which option is suitable for you, if you are deciding to contribute to your SRS, I would encourage you to think through about investing your SRS monies. Of course, finding out what is most suitable for you, or do reach out to our financial advisors for them to just walk you through what is suitable for you. At Endowers, you have two options. Next slide, Xingxi, of how you can invest your SRS monies. I think we hung again, I think. Apologies for the technical difficulties if you guys are seeing me online. Apologies for that. I think we should be back very shortly. Just give us a while for that.
Sorry, Lin Sing. Somehow there's another issue with the internet. Just let me quickly share my screen again. Yeah,
No problem. So did you get cut off or did I get cut off?
I think it's from my end.
Okay, all right. So yeah, anyway, so if you are going to invest, if you are going to contribute to your SRS, do seriously consider investing your SRS. And endowers, you have two options. Shrishi, can we get to the next slide of how you can invest your SRS monies? All right. So firstly, if you prefer us to recommend a risk-appropriate portfolio to you, we will recommend an optimized mix of equities and fixed income unit trusts to you as highlighted in this slide, right? As you can tell, it's a mixture of Dimensional, Vanguard, PIMCO funds, some of the best and most reputable managers in the world. We will construct a risk-appropriate portfolio that is unique and suitable for you. All right. So depending on your risk appetite, we will structure something for you. The platform will recommend something to you. Now, if you get to the next slide, the other option that you can look at is what we call our Fund Smart option, right? Whereby you are able to pick and choose your own funds. So this slide just basically shows some examples of the best fund managers that we have on our platform. So essentially, what we do is we talk to these managers, negotiate with them to bring the best funds on our platform, so that you, our client, will be able to pick and choose and construct your own portfolio. So using your SRS monies, you are able to tap into our expertise in providing the best-in-class funds for you. And we are constantly adding and re-evaluating the best funds in the world for you, right? So quick summary, you can use endowers to invest your SRS monies either in a optimized portfolio that we recommend to you or an advised portfolio, or you can pick and choose your own funds, right? But the basic thing is, if you are contributing to your SRS, please seriously consider investing your SRS monies. So the topic for today is SRS a cash trap or retirement windfall? We do think, right, and I do think it can be a retirement windfall if used appropriately. All right. Well, thank you so much for that. I'll pass the time back to Shing-Shi.
Okay, so let's get started on the Q&A from the audience. I think, sorry about the disruption with the internet connection. Okay, so there's this very upvoted question on by Anonymous. As a foreigner, if I move to a different country, can I keep keep my investment in SRS account, or do I have to close the account? Right, based on my understanding, you can still keep your investment in your SRS account, and after 10 years, you'll be able to withdraw it either at the 15% tax rate, or the tiered tax rate. Yeah. Okay, so the next question, we can withdraw money from SRS account from 62 to 72 years. What happens to the money not withdrawn after 72? So I've answered that question actually. So maybe just to share what I've put up on Slido is that the remaining value of the investments at 72 will be calculated, and they will be added into your income, taxable income for that year. Okay, I think this is a question that many people will be answering. I just created an account, but I missed that $100 bonus. Can I get it? Smiley face. I think the best, because we do have, to make it fair for everyone, we do have very set rules on how this, in terms of the eligibility of the different clients. So for those of you who already have invested your monies with endowers, you will not be eligible for it. But if you were to be somewhere along the sign-up process, you may be eligible for it. So please reach out to support@endowers.com to find out whether you are eligible. Okay, there's this very interesting question. I think, Lindsay, you can take this up. What's the difference between endowers and IFAs?
Yeah. Well, I mean, I think there's a lot of difference. Firstly, we are different companies. I think that's one. I think when you talk about IFAs, you probably be referring to a subsidiary fund Supermart, and I think it'll be a more helpful comparison when we do that. I think the very first difference is we are an advisory platform, right? We prioritize our advice, And the way we advise is, I would say, I would describe it as threefold. Run from a advisory standpoint. Before you even open the account with us, we have already begun curating the best-in-class portfolios that is suitable for our clients. Secondly, is when you begin to onboard, we will help you identify, well, at least you have to identify your risk appetite. And through that, we will advise you a suitable portfolio. And even after you have invested into our advised portfolio through a variety of manners, such as, through our insights article, investment office updates, you are also getting advice from us via there. So I think if there's one key difference, I think is we are an advisory platform that provides the best-in-class products to you. In addition, right, as a firm, we do not take any form of what we call trader fees or any commissions from any of our product providers. I think that's also a differentiating factor as compared to Fund Supermart, right? And the last, I think I would say, is that we utilize institutional share class products that are typically, only available at the private banks with $5 to $10 million, and you will not get these products at Fund Supermart, right? So I think hopefully that gives you an understanding of how we are different. Quick summary: we are an advisory platform. We provide the best-in-class institutional funds, and we are 100% aligned to the client. We don't take any commissions from the product providers. Hopefully that gives you an understanding of how we are different.
Okay, great. There are a lot of questions coming in. So everyone, please read through the questions that have already been answered or have been made. And maybe you can just help us out by upvoting the questions that you are most interested to find out. So we'll try, Lin Sing and I will try our very best to answer as much as possible. So yeah, do appreciate your help on it. Okay, let me just, there are some interesting questions about SRS investment for like individual US shares, whether you can buy SPY, whether you are able to, buy Bitcoin, as what I see from KH Lim on YouTube. So the answer is actually no, right? The type of investment solutions that are available for SRS is fairly restricted, right? So Bitcoins will be a definite no. Anything that's listed overseas is also not included as well, right? So, but the thing I think we have to take note of is that there are still great investment options for SRS, right? In terms of like low cost solutions that are equivalent, if not better than ETFs, right? You can access some of these on endowers, right? So how we look at it is that look at investing is that similar to why you want to buy at the S&P 500, we care about diversification. We care about giving you a cost of that broad market exposure beyond even just the US market, right? And very, very low cost, right? So for example, the 100% equity portfolio for the endowers advised portfolio will be around 0.4%, right? So that is very competitive. We structure it so that you pay less dividend withholding tax because we are using UCITS funds. So yeah, please do not have the assumption that SRS equals to very safe investments, because we do have you do have the opportunity to take very well compensated risks with a very broad-based diversified solution. Yeah. Okay. Let me just run through some of the other questions that are on the list. How should SRS be withdrawn such that you pay minimal or no tax? So the answer is very simple: spread it out so that you make full use of that 50% withdrawal benefit, right? So what happens is that the Singapore tax structure is that the more you earn, the more tax you pay, right? But if you spread it out more, then you will be able to pay less tax because more of the money will be at the lower tax bracket. So spread it out. Don't be anxious to get your retirement money out, right? So it's not like for some people, like for CPF, they will try to draw as much money as possible because this is the first time they are able to see their retirement money, right? But it will be prudent for you to withdraw it gradually, have a plan for it, spread it out across 10 years so that you get the maximum tax deferment benefit of SRS account. Okay, I'm just going to handle the admin side of things. Maybe Lin Sing, you can tackle the questions.
Sure.
No.
I'm just quickly looking through some of the question. Interesting one. When is the best time to top up SRS? I don't think there's really a best time. I think a lot of people do it at the end of the year because that's when the deadline is about to happen. That's when you need to contribute by so that you enjoy the tax relief in the following year. But I don't really think there's a best time. I think there are some people that would contribute, like myself, right? I just contribute like 1,000 here and there every now and then, so that throughout the year I will be, by the end of the year I would meet the 15,300. So what I do, as I share, is that I contribute 1,000, then I immediately invest to an endowers portfolio, right? So I invest personally because I have a long investment horizon. I invest in 100% equity portfolio. Again, this is not constituting financial advice, just sharing my own. But what I do is I spread out my contributions and then I invest whatever I put it in my SRS account. So there's no best time, right? It's ultimately up to you. If you can spread it out, just spread it out and then invest it as and when. So that's answering that. What are some of the other questions? That answers it. There are, I think there's a simple one. Is there any S&P 500 equivalent products that SRS can buy in endowers? Yes, you are able to do that. There are products to that. The Infinity US 500 fund tracks the S&P 500 and that's available. Would SRS or CPF top up be better for those in 20s? I think both have different purposes, right? I think for CPF top up, obviously you get to enjoy the guaranteed interest, as if you're referring to the SA account. But for the SRS, you will have to invest your SRS to get potentially any form of returns. So it will really depend on the individual. Personally, I like to cover my bases, so I have both. But I know Sheng Shi prefers SRS. I'm not sure whether you want to chime in this question. I think both have good purposes, right? So I don't think there's best. Yeah.
Maybe just to chime in very quickly on this is that, if I'm someone who is in his late 40s or 50s and I want to choose between the two, what I will do is that I will probably choose the CPF top up, right? Because once it's quite easy for you to get the money out and you have a shorter investment horizon, right? But if I were to be younger, then my guess is that you're more likely, not definitely so, but more likely to have a bigger risk appetite, a better ability to take risks. And that's where, SRS may make better sense because you have a lot more investment options for that. Yeah, just to share that perspective.
I think the number one question, is what happens if they pass away at the age of 65? Have you addressed that? So I think I'm just looking at the IRAS website. So actually, guys, a lot of the information is actually found on the IRAS website. So which is just to share that we are actually referring to it. Is that under the Income Tax Act, when an SRS member dies, any sum standing in his SRS account, his or her SRS account, shall be deemed to be withdrawn on the date of his or her death. So I guess that means that you'll be subjected to the same tax as on the day of demise. That's my understanding of it. Correct me if I'm wrong, Shing Shi. Would that be accurate to say that? Yeah. So hopefully that's helpful for you.
Okay, I think we are pretty much there in terms of the question. I think there's a lot more with regards to what is the optimal tax bracket, what's the break-even tax bracket for you to top up your SRS account. So I think I answered that at the front part of the presentation. If you want to understand a bit more about how we look at it, please rewatch the front part if you have missed it. So I think in general, what we encourage for is to at least have around 7% income at the 7% or more income tax bracket for you to top up your SRS, right? And of course, if you were to later on earn more, then you're more inclined to top up even more inclined to top up your SRS. If you were to earn less later on, feel free to stop as well. So that is it's totally voluntary. You can just adjust accordingly on an annual basis based on your financial circumstances. Okay, I think we are pretty much done for today. Hopefully we are able to answer all the as many questions in some form or another. If not, please reach out to us at support@endowers.com to find out more about how you can use your SRS. Right. So again, for new clients of Endowers, please feel free to check out this promotion that we have. You get up to $80 cash, $20 off your Endowers excess fee if you were to invest your SRS with us. That I understand that there's on top of whatever you can get from Endowers, there are also some offers from the 3 agent banks, DBS, OCBC, UOB, when it comes to topping up your SRS account. Right, so hopefully we convince you that SRS is great for tax relief. If you are like a promo hunter like myself, top up your SRS, seek out the best SRS deal for SRS top up into the agent bank. And of course, Endowers, we have one of the most cost compelling offer as well as investment product and offering when it comes to SRS investment. Hopefully, Ling Sing and I have shared enough to convince you on that. Of course, if not, hopefully you appreciate and learn something from today's session. And thank you for spending your Wednesday evening with us. Lin Sing, any last words?
No, I think, thank you all. I'm on the client experience team. So when you open an account, you will be interacting with me and my team. So I really encourage you, if you don't have an Endowers account, I'm just going to say it, just open an account. You don't have to invest immediately, find out more about products, and then take it from there, right? So it's a very simple, takes about 5 to 10 minutes to do it. Do it today, potentially get rewarded, and then plan for your retirement. That's all for me. Yeah.
Okay, cool. Thank you, everyone. Have a great evening ahead. Good night.
Thank you. Bye.